Good afternoon, everybody, and welcome. I hope you can see me. Hope you can hear me. If you can, give us a shout. That's always a good start. Welcome to our Friday webinar here for Admirals. And if you're watching us here, if you're joining us here, okay, that's great. If you're watching this later on demand on the Admirals YouTube channel, be sure to ensure that you ping on the old subscribe button there for the Admirals YouTube channel. If you've got any questions or comments, please you feel free to put them in. Feedback, if you like it, give us a thumbs up. If you don't, give us a thumbs down. That's fine. We actually like all feedback. Maybe you even have thoughts about what you'd like to see us cover in the future. Once again, you're very, very welcome to deliver that. And today, what we're going to talk about is trading the GBP, trading the British pound with a kind of a slant and a hint on it from the intraday basis. And I'll share one or two of my own little thoughts. Okay, from having done that, I used to trade GBP as an intraday trader for a hedge fund many years ago and stuff. So I've got personal experience from how we traded that, and I'll pass on an element of that to you. But maybe you already have thoughts about trading JP. Maybe you are an experienced GBP trader. If you are, it'd be great to hear what your own thoughts are on that. As I said, you hear me say every week, okay, we have here at Admirals, we have a very broad range of experience of people who join us for our webinars, from complete beginners, who are very welcome, through to people who are experienced traders. And I also recognize that we have a global audience, okay, from people joining us from all over the world. You're very, very welcome to be here with us and stuff, and we're looking forward to this conversation here. And as I said, if you've got any thoughts or any particular ideas yourself, we'd love to hear them. So without further ado, let's crack on, shall we? And give me a moment. We'll bring up the slides and we'll talk about trading the GBP. Thanks, Vincenzo. It's great to see you here as always. Okay, and to see a few other people there. Okay, recognise that we've had lots of people sort of coming for 18 months, 2 years now for our events here. Let's bring up the old slides and make it a little bit better there and stuff. So excellent, super. So there you go. As I said, intraday trading the GBP. It would be interesting to know who here has experience of intraday trading the GBP. Depending upon how you've done it, when you've done it, it'd be great if you have. Just pop us in the chat box. It'd be fantastic to hear what if any experience you've had with that. So remember, Admirals, they're a global Forex and CFD broker, okay, that are global presence with their local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, and giving you the opportunity to engage with markets using both MT4, MT5, and also the Admirals Supreme Edition. If you have any questions about that, please get in touch with your account representative and they'll be very happy to help guide you. And you can also now follow us on Telegram as well. Telegram, lots of traders use Telegram as a means for communication. By all means, you can do that. You can see us there at Admirals on Telegram. Get to see my colleague Jens looking the smartest I've ever seen him there in his nice suit there. But you are very welcome to sort of come and join us and join the conversation there. And as I've said before, you can also, follow us on YouTube. All right, we'll find that this video, my colleague Jens's video, and my colleague Marcus's morning sessions, they're basically on there at Admirals Global. Go on there, find it. Make sure you subscribe, okay, and you'll find tons of absolutely fantastic, useful information that you can take away and use in your own trading. And if you want particulars or with regards to fundamental analysis, well, you can listen to our podcast, okay, Admiral Markets Global Podcast. You can see it there on a wide range. It's available on a wide range of podcast platforms. But yeah, you can find yourself there, Admiral Markets Global, and you'll find our contributors and our analysts putting out little pieces there to help you make sense of the global market space. And if you want, you can also utilize a Stereo Trader. Stereo Trader is a plugin for MetaTrader, okay, that just basically makes the sort of the trading operation just a little bit smoother, okay. And if you're trading a good deal, it's a great little tool for you to check out and stuff. So be sure to take a look. So As I said, we're going to talk about trading the GBP, particularly intraday. So we'll talk about, what do traders need to be aware of when trading the GBP? As I said, I appreciate we always have a broad range of experience here in the room. We'll also talk about, what are the pros and cons of trading the GBP? Okay, it's, we'll get into that deeper in a few slides' time. And, are there any particular simple setups we can use when trading the GBP? And what I'm going to do is actually I'm going to share with you a very, very simplistic breakout strategy for trading the GBP in the mornings. Okay, just a very simple one. Okay, just because, as I said, I appreciate we have new traders here. Give them an opportunity to basically take away a simple strategy and start to take away and work with that and trade it. So for those of you who don't know me, you're new to the session. My name's Paul. I've traded for many years. As I said, I've traded, for hedge funds and for clients. I primarily traded FX indices and commodities, and the first fund I worked for was primarily in intraday FX on GBP. That was my focus for my own trading. Okay, for my longer term swing and position traders, I tend to be a trend trader, and actually for shorter term trading, I'm actually more of a reversal and mean reversion trader. So, how to intraday trade the GBP? So, as the slide says there, due to the nature of London remaining the world's #1 location for foreign exchange trading, there remains a lot of interest in trading the GBP, the Great British Pound Sterling. What we'll do today is we'll shed some lights on specific GBP trades that traders can take into consideration. And in this session, we'll discuss trading the GBP and what traders need to be aware of when engaging with GBP in their own trading endeavors. And in particular, looking at it, what you need to be, a couple of the things you need to be aware of when you're intraday trading the GBP. So, as I said, I've quite a vast experience of trading GBP, and I've traded it, as a kind of a small private trader through to trading it as the kind of a head trader on a fund desk. So I've had lots of experience of it and seen it across wide various market environments. Okay, and but it always provides us with some great trading opportunities. Now I appreciate that I am here based in the UK, so it's also natural, and in fact today I'm sat in London, so it's not actually a surprise that that if you're based in London, okay, and you're trading FX, that you're going to be looking at how the GBP works. But I also recognize that we have a global audience here, and that people want to sort of get exposure or interest in perhaps instruments or currencies that that perhaps are not your normal trades, that perhaps you're not your normal sort of everyday style. So hopefully this will just give you a little bit of information on that. And as I said, I realize we do have some very new traders here, so we're going to have a couple of slides just to set the scene, so to speak, and we can then talk about some particular specifics. So, for those of you completely new, all right, completely sort of new to the game of trading and trading FX markets, as it says there, the Great British Pound is the UK's currency and is invariably known as sterling. And, it trades 24/5, as does the rest of the FX market. But what we'd find is that, the main hours are 800 to 1600, okay, so about 4 p.m., 8 till 4, okay, on the main London time. That's London time. But what you will find, okay, and in some ways it helps us, depending upon where you are in the world, is that most sterling traders will focus on the early morning European session. That's not to say that they won't trade in the afternoons, etc. They will, but the focus is around the early morning European session, and in particular, as we get into the sort of Frankfurt Open at what would be 7 o'clock London time, okay, wherever you might be joining us from, and then into the 8 o'clock London, the main London Open, okay, 8 o'clock London time, which may well be different for where you are in the world, but that's what we look at, okay. That's that's where a lot of that focus is done, and in fact, actually, I would be suggesting that for most traders, if you're intraday trading, that, and you'll hear me talk about this a little bit later, is that for me, I actually want to be done by about 9:15, 9:20 London time, all right? Because a lot of UK specific data will come out at 09:30 London time, and actually I just want to be, I want to put my trade on, taken my profits and stepped aside. Okay, I don't particularly want to carry positions. In fact, I don't carry positions into news announcements there. So as I said, you've got the 7 o'clock Frankfurt Open, 8 o'clock the real London Open, and then 9:30ish you're going to start to. That's when you get a lot of the big news that will come out for GBP in the morning. Sort of relevant to the GBP. So you need to be just aware of these particular time windows. So, as the slide says, what is it that makes the GBP special? What is it that actually, helps us? What is it that makes it of interest to us as a trading instrument? And there's quite a few elements of it. So, one of the things is that we get an element of volatility there. Okay, then there are moves here. There are moves that are happening constantly within that particular market that help us. And that basically allows us to effectively, gives us opportunity. That's what, sends us opportunity our way in an effort to basically, give us great trading opportunities. The more volatility you'll have, the more opportunity there will be. Not unsurprisingly, that means volatility is a double-edged sword, and that can also mean that that can be work against you as well. But if you're an educated trader, if you're good and strong on your risk management, well, then invariably you'll see that start to happen. No, Darsh, and that was my battery my computer said that my battery was low, so hopefully that's all back in there at the moment. What also helps is that you can get some very good trends in GBP, even on an intraday basis. Okay, I generally would work on my own kind of rule of thumb is that I expect there to be at least one day a week where there will be a strong trend in the GBP. That's what I work on. Sometimes there's more days than that, and more European sessions like that. But I work on that kind of that. Invariably, there will be at least one day a week where there will be a very good trend on GBP. And maybe it's for a technical reason, maybe it's for a fundamental reason, maybe it's a news reason, maybe it's a reaction to some other event. But that can occur. You also have to be aware, though, that there can be sudden reversals on GBP. Now, I would say they are not here as we speak in 2021. They are not as much as we saw them 2, 3, 4 years ago, and we'll come on to the reason for that. But invariably, what we can see is that there can be sudden reversals. So, if you like to trade reversals, as I do, that does provide opportunity. And linked to that volatility is that you'll see, a good-sized average true range. Okay, the actual range that we can expect to see pips move in during a particular session, a particular day. That kind of thing becomes important to us, and there's also effectively a good-sized ATR, and that will change. Okay, that change that has been between that can be between 70 pips to up to 150 pips. Okay, in terms of what the average range is for a good move on the GBP. Part of that will depend upon which particular kind of GBP pair you trade, and also that is also dependent upon both local volatility, let's say domestic stuff going on in the UK, but also equally things that might be going on in the broader world that has an impact on the GBP. When it comes to looking at the GBP through the prism of risk as well, in terms of risk sentiment, GBP is very sensitive to risk, and is, I would consider it a risk on currency. So I think we did a session a couple of weeks ago there, in particular, sort of looking at trading risk on versus risk off instruments. And then in particular, I think in that one, we looked at focusing on trading gold, depending upon whether it was in a risk on or risk off. But invariably, what we would say is that, generally GBP is aligned with being, it performs better when there is a risk on sentiment in markets. And, as I said, part of those kind of good-sized ATRs, part of that volatility, part of those kind of very sudden reversals over the last couple of years were because of the events that led, around Brexit. So from invariably voting to it in 2016, and then basically the kind of seesawing that went on back and forth for a few years. And now what we're going to see, I think, as we kind of into the latter half of 2021, is that there will be elements of that as we have, effectively economies coming back out of the kind of COVID lockdowns. We're seeing, implications on supply chains, global supply chains, and invariably that will also have an impact on, on actually how the UK acts post Brexit as well. So, I would say that sometimes the volatility in GBP is not as much as it was a couple of years ago because of those Brexit elements, but there is still excellent, there's still good volatility in terms of opportunity for us to take particularly good trades. So when we're looking at trading GBP, we can actually trade GBP against the major other FX pairs, which you can see there: dollar, yen, euro, Swiss franc, Aussie, Kiwi, and CAD. Those are the kind of the majors. And you can actually trade, GBP across against other exotic pairs, and you'll find a few of those exotic pairs on the Admirals platforms. Generally, what I kind of suggest to people is that is a case of to begin with, if you're new, you can stick to the major FX pairs, and in particular, you're probably looking at kind of the pound against the dollar, pound against the euro, pound against the Swiss franc, perhaps a bit of the pound against the Japanese yen, and also pound against Aussie. All right, pound against New Zealand dollar. I find the spread is still a little bit bigger for intraday trading. Pound against Canadian dollar is can be actually very dull. All right, can be very dull, as actually can euro against sterling be quite dull. But actually, in some ways, that's not a bad place to sort of cut your teeth if you're going to be trading GBP on an intraday basis. But for most people, even if you're able to just trade pound against US dollar, you're effectively trading, the UK against the big daddy of the FX markets, okay, they're against the US dollar. And so, that is an opportunity for you to trade that because the spreads are very low here with Admirals. There's also great volatility, some great moves, in the morning European session, but equally there will also be a few moves in the afternoon as the let's say as the American market comes online. So, what I talk about is it's actually very important to have good routines. Okay, so it's a case of even though we're looking at intraday trading, as our primary focus here today, you will hear me talk constantly about the importance of having good routines. All right, good routines, and even if you are trading an intraday and you're trading 5-minute charts on sterling, you might find it strange, but actually I talk about having a routine. All right, what you want to be doing is, you want to just, I've talked about it many, many times, have simple routine, right? Identify levels of support and resistance from the monthly, the weekly, and the daily charts. Why is that important? Okay, if you're trading the 5-minute chart, well, what you don't want to be doing is, you don't want to be basically, you don't want to be buying into the resistance. You don't want to be selling into the support. Okay, and those kind of levels are significant. You want to also identify, is there a bigger trend in place? Okay, is there a particular trend on the daily chart that's happening? That there may not be, but it's useful information to know. Even though intraday trades, okay, might actually have might not necessarily be as buffeted by the let's say the bigger trend. There might actually be ways to utilize that for your own particular good, and we'll talk about that a bit later. Personally, what I will trade both, position trades, swing trades, and intraday trades. What I would look to personally to do is to look to trade with the trend for my swing positions if there is one, and that's a useful one because actually, as an intraday trader, okay, you might be able to identify, okay, where we might be getting an opportunity for a swing position in line with the bigger trend, and I'm able to execute that on a shorter time frame. Okay, the downside of that is you might actually have to take 2 or 3 trades to get into that position. So just be aware of that. It's not a panacea. But also if there is no trend, all right, if there's no trend, if price is just range bound or it's just not really very clear at all, well then what we look to do, and this is why I particularly like to focus myself on, is that look to be trading reversals. Okay, mean reversion for for day trades. Okay, that's what I'm particularly like to do, and we'll have a quick look at that a little bit later. But that in itself is a just intraday reversal GBP is a webinar all of its own, which I'll look to do in maybe November, December. But the important part from that slide is just to have a simple routine. Okay, to start with, get yourself a simple routine that you can work with, that you can follow, because actually that is more important to you than picking a great trade. Okay, having a consistent routine that you can just follow day in, day out, that will actually help you much more than trying to pick the best trade in the morning, right? Now and then, you're going to pick a good trade in the morning. Everybody likes that. We're traders. Everybody likes to pick a good trade. But actually, it's about being consistent, right? Consistent routine, day in, day out, especially as an intraday trader. That's the way we'd look at it. So, as I said, identify if there is a present trend. Okay, and you've heard me talk about it, plenty of time before. Is if there is a good trend should leap off the chart at you, okay, whether it be a bullish trend, whether it be a bearish trend. Okay, identify if there is a present trend. And what I like to do is, if I'm looking for kind of, let's say, swing positions, which might be on the sort of hourly or the 4-hourly chart, what I'd be looking for is, I'm looking for kind of particular pullbacks in what might be a nice 1 hour or 4 hour trend. And then within that, then I start to draw down into basically looking for particular pullbacks, all right? Looking for those pullbacks and then starting to go down into the kind of low, into the 30-minute, the 15, maybe even the 5-minute chart. Sometimes even I'll trade the 1-minute chart as well. But in those pullbacks, I'm looking for effectively good price action candlesticks to give me an opportunity to take a simple entry. So if you want to know more about the price action candlesticks, you will see that there is I've done like 3 or 4, maybe even more than that, videos that are all in the sort of YouTube webinar archive there. So you'll find ones on price action itself, on particular price action candlesticks, so things like pin bars, engulfing candles, key reversals, star formations, etc. They're all there. So I suggest go in there and have a look at them, and you'll be able to pick out a couple of fantastic opportunities, which might also, trade setups that actually provide you the opportunities that suit your particular thing. You will also have the opportunity, if there is a present trend, you want to look at see if there are particular good breakouts. I personally, I've learned over the years, I personally prefer to trade pullbacks and trends rather than new breakouts, but that's just my style. Okay? That doesn't mean that is the style you have to trade. What it is, it's the style that suits me. Okay, suits my personality, suits my trading style, and so that's what I particularly like to do. But equally, I know that there are also people who like to trade breakouts, that actually trading breakouts is their more natural way of operating. What I will say, okay, is for trading breakouts on an intraday basis, is that I find that a lot of them turn into false breakouts, which in itself is a trading setup for myself. But equally, what I have found useful is that if your price is breaking out, I kind of like to see if the price breaks out, then price might print an inside bar. Okay, once it's breaking out, so it's basically the market surged, it's resting. Okay, as it prints an inside bar. And then there's the opportunity for the next surge, and that's what you're looking to position yourself to effectively try and trade that. And you will see that on 5, 15, 30-minute charts all the time, and they do have good breakouts. Have a little look to see how they've shown up. Has it printed an inside bar after the breakout? That inside bar might actually be your opportunity to get on board and take that trade. So if there is no trend present, well, then on an intraday basis, what we're looking at is I'm looking to trade reversals. Okay, I'm looking to trade mean reversion for intraday trades, and in particular, and this is where something that is starting to useful is to have a look out of false breakouts of the Asian range. So I am let's try and see if we can draw this. I'm going to use, here we go. Let's bring up the old drawing tool here. False breakout to the Asian range. So you can see here, hopefully, that I have a little grey box there, which basically what that does is that effectively just gives me it prints for me. It's just a iSessions plugin that gives me a view of the Asian range. Okay, so it just prints there so I can see. And hopefully you can see that, that's for me in the UK, that's the Asian range is overnight. So, I'm really looking from about 12 o'clock midnight UK time through till 7 o'clock in the morning, London time. Okay. And it prints there. And so what I expect to see is false breakouts of the Asian range. And that in particular is what I see, because as I said earlier on, as I kind of alluded to earlier on, I personally expect that we will see, we'll see at least one, perhaps 2 days a week where we'll get a good trending day in GBP. But if the overall market is range bound, and I'm expecting the intraday to be equally range bound, and that's what I'm particularly interested in. And so hopefully maybe you can see here. Let's just see if I can. As always, I say I'm a better trader than I am an artist. So please, go easy on my drawing skills. Okay, we can see the price kind of broke out the Asian range before it dropped away. Same here. Okay, price actually broke out, but actually it printed a double bottom before it worked its way up. So looking at understanding reversal patterns, that will be helpful. So double tops, triple tops, head and shoulder patterns. Okay, looking at that on an intraday basis to see how that breaks out of the Asian range, or as I say, actually fails to. Actually, you'll see that price will push out there as the. It might happen at 7 o'clock London time with let's say the European traders, but it might actually wait till a little bit later. Okay, it might actually take an hour or so for that to occur, for that to invariably happen. So you just have to watch and see how that, and that's about understanding your price action. It's about understanding your reversal pattern, and invariably that is really what's giving you a version of a mean reversion trade. So that's what we're trying to look at and keep an eye out for. And you'll find that across the pound against the US dollar, pound against the Japanese yen, pound against the Aussie dollar, pound against the Swiss franc, pound against the euro against the sterling. As I've said, pound against Canadian dollar, I don't find it happens as much as with the other currencies, but other people may disagree. Pound against New Zealand dollar, it can do, but you just have to recognise that the spread can be considerably bigger than maybe the shorter term spreads on something like euro sterling or pound against US dollar, and that is something that has to take into. That's something to take into account. We all have to pay spreads. It's a cost of doing business. But invariably, let's say if you're new to sort of intraday trading the GBP, my suggestion is, you focus on the currencies like the majors, where you actually, have got much smaller, tighter spreads. Okay, that's what my suggestion would be for yourself. But as I said, if there's no trend present, okay, false breakouts of the Asian range, reversal patterns, mean reversion trades, they can all be very, very helpful. And what I'll do is, I think probably November, December time, I'll do a video just on specifically on kind of those, reversal patterns, intraday reversal patterns on there. So be sure to keep an eye out for when we do that. But today it's just a kind of an all-encompassing look at intraday trading and GBP to work with. So, how to trade that kind of the GBP. So here's just some points that I've learned from trading the GBP on an intraday basis. I think I kind of alluded to it at the start. Volatility is both it's a blessing and a curse. All right, it is a blessing and a curse. When you're on the right side of the volatility, well, then it's the wind within your sails. Okay, that will take you to your profit target quite happily. Equally, when you're on the wrong side of that volatility, you're going to be on the wrong side of it, and you're going to want to close that trade and do away with it as quickly as you possibly can. As I kind of also talked about, during the Brexit negotiations, GBP was very, very sensitive to news. Okay, and actually the news would always beat the technicals. You could have a beautiful technical setup, and then there'd be some news come out from a piece of the negotiation, and it would just send all of the sterling pairs awry. You know, GBP, because of its risk sentiment element, and it's a risk on, it is still sensitive to news, okay, especially in the kind of the world we live in now. But, you know, it's not as sensitive as it was during the heyday of the Brexit, but there will still be elements, okay, that have an implication on that, and that can happen too. You know, that it's very possible for you to be in a trade, and then, you know, some unexpected news, you know, comes out that basically, you know, makes the sterling pairs sort of turn tail and run against you. That's not an implication of you being a bad trader. That is just, you know, that's just welcome to trading, ladies and gentlemen. That happens to everybody, okay? So, you know, it is important to understand the news when you're trading the GBP on an intraday basis, okay? So that might be the thing where, you know, you might have to invest in a squawk box or something like that to give you news coming out that just might actually help you. Just to give you a thing, just make sure that, you know, if you're an Admirals account holder, you have access to premium analytics. So make sure you go into there, have a look at that. Okay, have a look at the pound against US dollar. It'll always give you some information on that. And then flip to that, okay, and, you know, further than that, and what we talked on there before is, you know, most UK news items released at 9:30 a.m. UK time. And, you know, that's what I said earlier. You know, I wanted to be out of my positions by 9:20. All right. I don't, you know, I would never take a sterling position, a losing sterling position, into the news, okay, hoping that the news would bail out my position, because that's not trading, ladies and gentlemen. That you know, that's gambling. All right, that's you being a punter. You can't control the market, but you can always control your position. And so, you know, my old suggestion is that, you know, if there is news coming out that day, if there is news at 9:30, ideally what you want to be doing is effectively is if you are in a position, you want to be out by about 9:20, okay, because the market will be a little bit of volatility running up to the news. It might well be that you have to wait until after the news for the market to make its move, okay, and that can occur, that can happen, okay. You know, remember, you know, the market's gonna trade 24/5, but I've just found personally myself is that, you know, between a kind of a window of between, let's say, about 7:30 and 9:30, okay, UK time, tends to be a good, you know, kind of a good window, okay, good trading window there, right, you know, to be in and to be out. Yes, you can trade, you know, later on into the UK session. Sometimes moves might happen later. If it's Bank of England day, okay, that doesn't, you know, nothing really happens until the midday, okay, or on when the kind of Bank of England makes its interest rates announcements. But generally, as a rule, you know, you want to be in and out and done by about 9:20, okay, in an ideal world, if there is 9:30 news coming out for you. And what we're sort of looking at there is effectively what you might see as well is that, you know, you can look for differences between the kind of the 7 a.m. Frankfurt Open and the 8 a.m. London Open. You know, just as Vivek, sometimes what will happen is, you know, the sterling pairs may start at 7 o'clock going one direction, and then the London Open takes them the other direction. So that's, as I said, just, you know, keep an eye out for reversal patterns, okay, as we go from Frankfurt into London. But there will be also, I'd say, at least, you know, one day a week normally where you will see a move from that might start in the Frankfurt session and then particularly run all the way through the morning. You know, as I said, there's normally at least one day where you'll get a trending day. The challenge as a trader is being able to work out, you know, is this a trending day or is this a reversal day? Most of the days you'll get moves, but then you'll get a kind of a mean reversion coming. But as I said, at least one, maybe two, sometimes more, if there is a strong trend running in sterling, either bullish or bearish, well then basically, you know, you'll get a break in a move and a play through from it. And that's, you know, that's a challenge most traders will have. Okay, is this a trending day or is this a trending day or is this a reversal day? All right, and you just need to be, you know, you need to be open to what the market is telling you. Okay, the market always communicating to you. The market is always telling you what it wants to do. It's your job, all right? It's your job to understand it. Like learning any new language, okay? The more you work at it, the more you embrace it, the more you get stuck into it, the more you'll actually sort of, you know, the quicker it'll add value to your own particular life. So look at that, and we'll have a little, maybe at this time I'll have a little bit of a look around that. Being aware of the London fixes, if you trade the sterling in the afternoon, that's really is about so there'll be a fixed price. Okay, the effectively most of the interbroker dealers will have a caller price, I think about 4 o'clock, and that will be the price that sets things like the LIBOR rate. In the old days would have been set the LIBOR rate for the kind of overnight interest rates that banks would pay on cash they'd borrowed or deposits. Also things like setting for stuff like for prices for commodities, etc. So that would happen around about 4 o'clock. So sometimes that you might see some volatility fly in and out of sterling if there is something particular happening, something particularly occurring. Generally, what I normally say is that from, as I said, most traders, most people who are intraday trading GBP, are going to be doing it in the morning. In the afternoon, if you're trading sterling in the afternoon, well then invariably, unless there's some particular UK news, which is very, very rare, the sterling will be buffeted by basically what is going on in the US market. So my own suggestion is for intraday trading, you want to have it done in the morning. And because and this is a personal opinion, my own view is on intraday trading FX pairs is that the afternoon session becomes more volatile as we have both the Americans coming into the market and you have the Europeans. That makes it volatile in the sense that markets will tend to basically backtrack on maneuvers in terms of they may well just effectively haven't been in a trend, will go sideways, or they'll maybe break out, or maybe they'll just reverse because there's more players involved in that particular market there. So my normal suggestion is in an ideal world you want to be in and get your intraday trading the GBP done in that European session. The price is much cleaner. The price action is much cleaner in that morning session than it is in the afternoon sessions. So I said I'd share with you a simple breakout strategy that you can take away, utilize. I say for new traders it helps because it's quite mechanical. So it's something simple that you could invariably look at and take away and use it as the basis of a starting point for intraday trading on the GBP. What we're looking at is we're working on the London Open at 8 a.m. London time. That's what we're going to focus on. London Open at 8 a.m. What we're going to look at to do is we're going to use the 60-minute candle that finishes forming on the GBP at 8 a.m. So that can be to start with GBPUSD. So that is the candle between 7 and 8 in the morning, 7 and 8 London time. So, you'll have 7 a.m., you'll have Frankfurt Open, then you'll have, 8 o'clock, the London Open. It's that hourly candle that we're interested. So one of the first rules or first filters is if the range of the candle is 40 pips or more, then ignore it. There is no trade. We've already had a considerable move just starting there, so there is no trade. What we're looking for, actually, preferably, is to actually have a much smaller candle, because what we're looking to, a smaller range candle, means there's a breakout, there's a likelihood that it's going to effectively work its way and move its way. So if the range is less than 40 pips, then there is a trade. What we're looking to do is to see a breakout of that candle. So for buys, look to buy at kind of 2 pips plus the spread above the high. For sells, look to sell at 2 pips below the low. The stop is going to be 1 pip inside the other end of the candle. So for the buys, so for buys, the stop is 1 pip above the low, and for the sells, it's 1 pip below the highs. What you're looking for is an initial target of between about 22 to 25 pips for your move, and then if you wish to basically to run the trade as much as you can, because it's that one day of the week where effectively it might run its full average range, well then after that use a 3-bar trailing stop on your particular position. So you've got a little bit of belt and braces, there. And what we're looking at is that as the market comes out of the Asian range, we're looking to as the Europeans come in and then London to open, we're expecting to see an element of volatility in price, just for it to break out and maybe move 20 to 25 pips, to take that, and then as I said, I work on a rule of thumb that there'll be one day a week where there will be a good run, okay, and it's a case of understanding, if you want to sort of try and trail and run on that. But there are a couple of caveats, a couple of things to be wary of. Okay, so just always make sure, okay, that you're just aware of the nearby support resistance levels, pivot levels, and for those of you Fibonacci traders, the fib levels. Personally, I'm just looking at whereabouts of the support resistance levels if there are pivot levels. And also the whereabouts for myself is like a whereabouts of the major moving averages, like the 50 and the 200. What we don't want to be doing, as I said, is you don't want to be selling into support or buying into resistance generally. Okay, that's because even if the trade worked, it might actually spend a couple of hours just working its way through those support resistance levels. What you can also do is to see, is there a particular candle pattern, okay, for that candle? Sometimes it will be, sometimes it might be, maybe it's an inside bar, okay, it's getting ready to explode out. Maybe it is already setting up as something like a pin bar or an engulfing candle. It's giving you an insight, okay, as to what it price wants to do. What you'd also start to do is that, as you become more experienced, again, as you become more, watching the flow, okay, within sterling in the kind of 7 o'clock and 8 o'clock, well, then actually some people will actually start to look at trading the kind of the 7 a.m. candle as well. So they might look to trade breakouts from the 7 a.m. candle, and then also, breakouts for the 8 o'clock candle. And they might look at doing it on both, in this particular case, like pound against US dollar and pound against Japanese yen. The pound against Japanese yen has... It is quietened down, okay, from what it would be many years ago. Pound against Japanese yen was, I think it was kind of known as the dragon, because trying to trade it was a bit like trying to hold the tail of a dragon. Okay, the spreads were I remember the spreads on pound against yen being between like 10 and 15 pips. Okay, but then it would sometimes move 250, 350 pips in a day. So there was move, but it could be very, very volatile. And as I said, it was a bit like trying to hold onto the tail of a dragon. Okay, it has calmed itself down, okay, a lot since those days. But there was still an element of volatility. Still, there's some good moves about it. But even just being able to trade pound against US dollar and pound against Japanese yen, that in itself can be just enough opportunity provided for you there. And so let me just see if I want to go back there, because actually, in this particular case here, this is the oops, as I said, just forgive my rubbish drawing skills, but that was the candle. That is the 7 to 8 o'clock candle. And having been in a pretty small range throughout the Asian session. And you can see that basically, it blows its way up there, doesn't it? And actually moves. But then actually what happens is, actually very often, it having moved there, it then basically comes all the way back. And here's the interesting thing for us, as it effectively opens, as it opens there, the London opens there, by the end of the day, okay, we're back down here. We're not actually that particularly far from where we started out, and that's what you can see on those FX markets there. Okay, is that you might get a push in the morning, but actually it might just completely retrace in the afternoon. And once you're a little bit of expertise, you've got a bit of experience, well, then that actually offers opportunity for you. As you increase your understanding. As I say, the market is always communicating to you. It's always telling you what it wants to do. It's just you need to effectively be in alignment with it. All right, the market doesn't get in alignment with you. You have to get in alignment with the market. So there you go, ladies and gentlemen. In conclusion, pound sterling is a popular trading instrument based on London's location. It is still the #1 session for FX trading. Traders like it because it is volatile. It does have strong trends and can have good sized moves. But what we learned through the Brexit is that it can be very, very sensitive to news, and in particular risk sentiment. It is a risk on currency. Okay, so if there's a risk on currency, if we are in a risk on environment, well, then invariably that is going to favor bigger moves in sterling. If we're in a risk off, well, then invariably, the kind of the sort of what you can expect is the average range is going to decrease within that. Pretty simple trading platitude. when it is trending, we want to be looking to trade with the trend, either using a pullback, which is my preference, or perhaps a pullback. When it's range bound, okay, when that market is range bound, that's when we're looking for particular reversals, and I'll do a particular session. Trading the London breakout at 8 a.m. is a very simple, mechanical, popular trading style, but just always be aware, okay, that that news comes out at 09:30, okay. So Darshan says, what would you say the future is for GBP after this Brexit? Same opportunities as before. My own view is that I think we will see, we will see some fantastic opportunities in sterling in the UK economy. I think there's going to be problems because there's going to be challenges because it's 40 years of you kind of being euro centric. Also, we had coming out of COVID, and also the just-in-time supply chains have been really damaged. But that isn't just the blaming on Brexit, but that is actually globally. Everybody is experiencing that at the moment. Everybody's trying to find a solution to that, and I think that will provide opportunities in economies, and then with that will also provide opportunities within particular currency pairs. So before we finish up, don't forget to join me next time. Okay, same time on Wednesday, 2 o'clock London time. You can join me. And actually, what we're going to do is we're going to do an introductory session, learn about Forex trading for beginners, all right, including what is the FX market and how does it operate? Why are central banks important to FX markets? And how does a trader engage with FX markets? All right, so that is 2 o'clock London, Wednesday, 13th of October. Check your inbox for the webinar links, or head over to the website to sign up. If you want to contact us, as always, you can do so. You can see the details there. Email us at global@admiralmarkets.com. Maybe you've got questions or comments or thoughts. You can do. And as always, you can follow us at facebook.com/Admirals Global. And also, as I said, Admiral Global's there on the YouTube. You can be sure there to search us on there. So I hope you found that useful, ladies and gentlemen. Unfortunately, we ran out of time as always, trying to sort of share with you as much information as possible. Hopefully, if you're a new beginner, okay, that has given you just a little bit of insight into trading GBP and how it can actually provide opportunities and ways that you can start to focus in and look at what is available for you. As I said, go into the Admirals webinar archive and you'll find lots of videos there on price actions, on trading reversals, etc. Particular individual candlesticks that you will see that are basically useful to help you with trading GBP on an intraday basis. Have a little look at that kind of breakout strategy that I just shared with you there. Take away and have a little look at it and see how that has played out for you over the last couple of weeks and months. And as I said, we'll look at doing another session in the future on specifically intraday trading reversals on GBP for you. As always, I wish you the very best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week coming up, and I look forward to speaking to you soon. Take care, everybody, and trade well. Cheers.